How's it going, everyone? My name is Dan, but you can call me Malone. And last week, I got the opportunity to sit down and speak with my good friend, fellow YouTuber and entrepreneur, Darragh Lucey. We spoke about starting the investing journey, attitudes towards money, and how Darragh sold 2 businesses in 2021. If you enjoyed this video and want to see more like it, don't forget to leave a like and subscribe. Grab a coffee and let's get into the video.
Thanks for having me on, Dan.
No worries.
Great to be here. First question, and I'm going to start with a little bit of a controversial one for a lot of people. What are your thoughts on cryptocurrency?
Yeah, I think the crypto wave really took the world by storm in 2020 specifically, and it's one of the main reasons why I kind of got involved in spreading the word of financial education. So I personally am the crypto investor. I do believe in the underlying blockchain technology, but as for crypto itself as an investment class, it just doesn't suit my kind of investment thesis. And I suppose the main reason for that is when I first got into investing, I was very, very inspired by the likes of Benjamin Graham, Warren Buffett, and their kind of thesis around value investing and really understanding the value of what it is you're investing in. So I really like to be able to take a company, look at its cash flow, its free cash flow growth, and say, okay, based on this metric, I can put a valuation of X on that security. And I think for me, with cryptocurrency, I just find it very hard to place a valuation on it, because the value of any investment is always going to be a function of the price you pay for it, right? So if you overpay for any investment, it could be a company, it could be the best company in the world. If you pay too high a price, the value you're getting from that investment is inherently going to be lower. So with cryptocurrency, I just can't place a value that I know, okay, if I buy at this price, that's a reasonable value for this particular crypto, you know?
And what warnings would you give to, say, somebody who's heard a lot about it, who doesn't want to miss out on it, who's experiencing a bit of FOMO, and they might have, say, €1,000 to play around with? What warnings would you give to them when going into the market?
The investment journey really doesn't start with an investment. I really do believe it starts with an analysis of oneself and understanding who you are as an individual, what your tolerance for risk is, what it is you want to achieve with your investments. And I think, as you said, so many people are caught up by FOMO and the idea that, oh, my friends are investing in this, so I need to get into it. That can be very, very dangerous because, you know, yes, you ride the wave and you kind of get that rush of excitement, but all of a sudden you're invested into a very volatile asset class that you might not fully understand. And we've seen it over the course of the last year and a half, 2 years. Crypto can drop by 10, 15, 20% in a matter of 24 hours. And for someone who's completely inexperienced with investing, which obviously a lot of people are when they first get started, to see that happen can be quite a shock. And they could sell out, they could realize and lock in that loss, and they might never come back to the investing game. So my piece of advice is, if you are going to invest in cryptocurrency, make sure you understand what it is you're investing in and make sure it makes sense in the context of what you want to achieve with your investments.
I think that's very sensible advice. What would you say to somebody that wants to get into investing full stop and has never actually dabbled in stocks or index funds or crypto? How would you start your journey in investing?
Everything starts with education. You really just have to understand all of your options out there, because if you don't have a full picture of what's available, you'll never really know what's going to suit you the most. So again, it's coming back to that analysis of oneself, and the investment journey really is a point of kind of self-reflection. It starts with cash management. It starts with understanding how much you have available on a monthly basis to invest. So, you know, you'll always hear from traditional financial advisors, you need to have your emergency fund locked up. Things like this are very, very important before you start investing. So whatever that means to you, whatever amount of money you need to have in the bank to feel comfortable at night, get that saved up, get that locked up first of all. Then what I would advise really is start looking into your bread and butter, you know, investment classes. So like ETFs and index funds have been all the rage for the last while, and it's no surprise why. You know, there's tons of research out there that shows, you know, passive ETFs over the long period of time outperform actively managed funds. And the likes of Vanguard and iShares are doing fantastic things. They're making great investment products that are very, very cheap and accessible. So for a beginner investor, don't overwhelm yourself with the idea of investing in individual stocks and everything that kind of comes with that. Why not try out owning the entire market and see how you feel about that? Own a piece of all the North American companies, own a piece of a global world index. It's a lot more sensible to just own that total piece of the pie and kind of get a feel for investing before launching into any individual stock.
Yeah, I think that's great. And similar advice was given to me regarding stocks, that investing in individual stocks can be a little bit volatile and risky because, like you said, you're investing in one asset as opposed to, say, the North American Fortune 500 or top 100 or FTSE or whatever
Yeah.
it is. Can I get a bit of an idea of how you might structure your portfolio?
Yeah, it's definitely a question I get asked quite often over in the Instagram, people DMing me and looking for that kind of free advice. But the one thing I always tell people is, first of all, look at the pension. And people always get surprised when talking about pensions. Pensions, they're not for old people. It's not retiring. I don't even think about that now. I want to invest in stocks and crypto. The reason why pensions are great.
That's me, by the way.
The reasons why pensions are great and why I recommend them so much is because they are an extremely tax efficient form of investing. So the best way to look at pensions and the tax relief on pensions is to imagine a 3-step journey. So if you first take the first step of the journey where you have your initial investment into the pension. So imagine you have €100 and instead of getting paid that €100 into your bank account, you decide that you want to put it into your pension. So if you had chosen to receive that €100 into your bank account, you would receive about €60 after tax if you're a higher rate taxpayer. So €40 will go to the taxman. Now, if instead you decide, okay, €100 going into the pension, that full €100 is going into the pension and is being invested for your future benefit. So you're automatically realizing a 40% gain on investment by choosing to invest in a pension. And obviously that can't be achieved with regular personal portfolio investments. The second part of the journey is actually when the investment exists within the pension itself. So any investment gains and any investment income coming from the pension investments are also tax-free. So you're getting tax-free growth on your investments for decades. Once again, cannot get that anywhere else. And then when you do eventually reach retirement, the tax authorities actually allow you to take a portion of this great fund that you've built up over years. You can take a portion out tax-free as well. So that's really just unmatched tax-free benefits associated with investing in pensions. So when you're looking at investment allocation, always start with the pension. So you might ask, okay, well, what do I invest my pension into? Generally speaking, the younger you are, the more risk you can afford to take on. So there's no logical reason why somebody in their 20s should have all of their pension investments sitting in, a government bond fund. Really what we're looking at here is investing more or less 100% in equities if you're in your 20s. You really want to get that exposure to high potential gains. Because coming back to the principles of compound interest, the earlier you start, the better and the more faster it's going to grow over time. So in theory, you've maxed out your pension contributions to the max because you have certain defined limits specified by tax law. And if you still have excess cash available for investment after you've looked after your pension investments, that's when we come along to the personal investment portfolio. So in terms of asset allocation and how I would structure a portfolio, for me, 90% of the population are going to be best served by investing in low-cost ETFs. It's just a fact. There's tons of research done by Vanguard which shows that investing in ETFs more often than not is going to beat out investing in individual stocks. And most people just don't have the time to do the necessary research when investing in individual stocks either. So I would honestly say max out the pension and have a portfolio made up of maybe 3 or 4 low-cost ETFs. And then over time, as you start to get used to the world of investing and you may be taking interest in investing in individual stocks, then you can start putting in the time, researching individual companies and have a small bit of your portfolio allocated towards that. And I know you might be advocating towards a bit of cryptocurrency as well, which is totally fine as well if you're understanding that space and you want to get that extra volatility into the portfolio. But definitely kind of low cost, safe assets over an extended period of time is where I'd go.
Good. I think it's very important to get opinions from all sides in this, particularly from someone like yourself who knows a lot more about that side of investing than I do. Einstein called it the 8th wonder of the world, compound interest.
Yeah.
It clearly is something that the earlier you get into, the better it is when you end up retiring or when you end up realizing whatever profits you make. I'm going to ask you something about your attitude towards money in general. Lots of people may have a negative relationship with money, whether they have none or whether they have a lot of it. How would you define your relationship with money? What's the purpose of money for you and the underlying why?
It's something that's going to differ from person to person, but there was a great quote by a guy called Anton Creel. So he has this YouTube channel called The Trading Institute, and he had a documentary talking about his like 10 fundamental principles of finance. And he was discussing that exact question. He was asked, what would your advice be when discussing an individual's relationship with money? And his perspective was, you need to respect money, but also equally be indifferent towards it. So money can really be a great tool to achieve great things if you know what you're doing with it. But the reason why I suppose money is such a dividing factor in our society is that it's very easy, for someone who might have quite a lot of money to say, okay, yeah, I'm going to invest some money, I'm going to attain financial independence, etc., etc. But from the perspective of someone who might be in a very difficult situation financially, they might have a difficult family situation, they might have, a difficult health situation, money might not come as naturally to them. So it's very much a case of, you really do have to respect money in the context of your own situation. But this is equally why I always say on the YouTube channel, personal finance is very much personal. Every decision you make financially has to be made in the context of your own individual circumstances. And I really do believe that's one of the biggest challenges facing personal finance content creators today, is really getting across that message. Because someone can watch my videos and they can take away something and they might try to apply it. But my own opinions are made in the context of my own personal circumstances, and my circumstances are going to be completely different to another individual's. So you really do have to understand money in the context of where you're at in your life and try to figure out how best you can utilize what's available to you. And the best example of that is, for example, someone who's in a lot of debt. It's generally not advisable to start investing until you've paid off your short-term debt, because it's very expensive. Yeah. But then again, you have Malone Financial telling me that I should start investing as soon as possible. And that's a classic example of how you need to consider your own individual circumstances.
More and more people these days are working for themselves and they're self-employed, and they may not necessarily have the facilities in which a company can help them with their pension, get it set up and maybe contribute to it. What advice would you give to that person with regards to setting up their pension? Because I personally don't have one.
Yeah, I suppose there's two answers to that question. The first is for people who don't have access to an employer scheme but are employed. And this is the case for so many workers around the country. People don't realize that your employer is legally required to facilitate your pension provision. So even though they might not have their own scheme, they have to have something available for you to invest in a pension. So that goes if you're working in retail, if you're working in a shop, if you're working part-time in a bar like I did for 3 years, you have to have the facility in place to be able to invest in your pension. So that's the first thing I'll say. Everyone does have a conversation with your employer.
I had 2 businesses and I didn't know that.
Yeah, everyone does have a conversation with your employer and make sure that the pension is available. But for self-employed individuals, what's likely going to end up happening is you're going to end up investing in what's known as a personal retirement savings account, or PRSA. So these are individual personal pension products that are set up by the life companies like Irish Life, New Ireland, Aviva, Zurich, etc., etc. And effectively what they allow you to do is get all the benefits of investing in a pension, but from your own personal perspective. The drawback is there's obviously no employer matching contribution, so it's all on your own back, and you are limited in terms of how much you can actually contribute to that pension. So for example, if you're under the age of 30, the maximum amount you can contribute in any 1 year is 15% of your salary, up to a maximum of like 115 grand.
Why?
Because the idea is that revenue want to encourage people as they get older to start investing more and more. So over time, they actually increase the percentage that you're allowed to contribute to your pension, which in my opinion actually doesn't make any sense at all. Because logically, you would think that the earlier you start investing and the more you invest from a younger age, the better performance you're going to have over time. But again, from revenue's perspective, if they were to allow people to invest lots of money into their pensions,
they
from
wouldn't
a young
be getting
age,
taxed.
Exactly, they wouldn't be getting as much tax. So it's just kind of one of those trade-offs that's quite annoying from an investing standpoint, but it is what it is.
Okay. So I am starting a challenge in a couple of days where I'm going to, from scratch, learn how to trade options. Any advice for me?
Fair play. First of all, options are a different game when it comes to investing, simply because you're dealing with derivatives. So derivatives is the name of the umbrella asset class under which options fall. So for anyone listening who doesn't know what a derivative is, a derivative gets its name because it derives its value from another underlying stock. So an option. So if you had a call option for Microsoft stock, that option's value is deriving its value from the underlying Microsoft stock. So my advice for you is to learn as much as you can. I mean, there's lots of great YouTube channels out there. We mentioned In the Money earlier before we started shooting. You know, he does some great videos on options learning. But again, a lot can go wrong with options trading, but equally a lot can go right if you do it properly. So spend the time getting to know what's what and go about it slow and steady.
Most likely it will go wrong, so make sure people stay tuned to that. I can imagine the sense of relief for the watcher when they hear derivative, that we're not talking about calculus or one of those things.
Yeah.
But that's great. I'll take that advice.
Cool. I actually just want to transition now to, I suppose, when we first met, which was at the Web Summit in Lisbon.
Steamy room. No, I'm joking. Sorry. No, forget that. Do that again.
So it was my first time ever going to the Web Summit event. I know you did a review video on your YouTube channel. I personally thought it was a lot of crack, meeting people, like-minded people. What was your overall thoughts of the event?
Yeah, I definitely went in there with the same attitude you did. I went with the anticipation that the event itself was going to be the biggest attraction.
Yeah.
But what actually turned out to be the biggest attraction was the extracurricular events that were happening. So not just what was happening during the day and you have all these amazing speakers, but actually meeting people outside for a drink or a coffee in a casual setting, because I felt that was where you established the most connections.
Yeah.
And that's where people really started to maybe open up and not be as closed off as you would be when you're in an environment where people are, trying to impress, because rarely you get any progress or you really make any connections truly in that sense. So I thought it was brilliant. I thought it was a great event. Lisbon is an absolutely beautiful city as well.
It's brilliant.
There's lots happening, lots going on. One of those weekends that you don't really remember, but you never forget.
Absolutely. And I think the one thing I loved, as you said, about Web Summit is those casual conversations in the bar afterwards is actually where the real value is. Whereas you would think it would be at the kind of speaker events and things like that.
That's it. Everybody has a similar mindset too. Everyone there is either there on behalf of another business or they're there for their own business, or like two of us as well, we bonded over the fact that we both had YouTube channels. There's always something that you're going to have in common with somebody else.
Yeah.
And thereafter, I think we all know, especially, Irish people, we bond over a few drinks, and it really is a great way to make friends and to establish connections, whether it be fruitful or not. It's just a good way to actually enjoy yourself in the business world.
Absolutely. I might just ask you then, because I know you had a very successful 2021. You sold 2 businesses, if I'm not mistaken. Maybe just talk to us a bit more about what those businesses were and how it felt to go from founding those businesses to actually selling them and kind of realizing your journey.
How long have you got? No. Yeah, absolutely. So yes, 2021 was a great year on paper, I suppose, for me with regard to selling the businesses. So back when I was in college, I did electrical engineering, and I knew pretty quickly doing the course that I loved the content of the course, but the career itself wasn't exactly for me. I always knew I wanted to start a business, and that desire was shared by my best friend, Nathan, as well. So 2 of us had already decided after college that we were going to start a business, not knowing what that business was going to be. Like any business, you need a problem. You need to solve some sort of problem. We didn't exactly know what that was going to be. So we took a year out, we went traveling, and we were on a beach in Cambodia, and it came up on our phone. Irish Times had just come up with an article saying that dropout rates in colleges were at an all-time high. Nathan and I experienced this in our own course, where I think 30% of our class actually dropped out in first year alone because of the misconception that the course was easy because the CAO points were low. But that definitely wasn't the case. So we established the problem, and it was the problem that we wanted to solve, not because necessarily it was the most lucrative problem, but because it was a genuine problem that we could apply technology to. So that's where we formed Yooni, and Yooni was my first business, and I did it with Nathan. The whole concept behind Yooni was that it was a platform that utilized technology to help people best determine what they wanted to do after secondary school. And it was a long process in getting the technology together and getting the platform ready. But we were lucky enough to launch Yooni the day schools closed for COVID-19, which for us was the worst timing in the world at the time. But it actually turned out to be fantastic.
Blessing in disguise.
A blessing in disguise, because look, we were an online platform.
Yeah.
People were forced to move online.
Yeah.
Guidance counsellors who we worked extremely closely with were not that keen to move online straight away. And now for us, it was the perfect opportunity to showcase what technology could do in assisting them and their students to help them better determine what course they wanted to do. So within a few months, we had students from every school in Ireland using the platform, which was fantastic, and growth was going well. And because I didn't have enough time as it was, I decided to start another business. And that was Grade Academy. Look, I don't think I need to expand on this too much. Online learning was one of those sectors that was just absolutely booming during COVID. Yeah. And for me and my experience in the kind of ed tech space, I felt that that wasn't being properly addressed for a certain kind of caliber of students. So what I wanted to do was basically develop a platform where students could learn online in a holistic way, but also in a very strategic way. I didn't want students to waste their time watching videos and courses that were 20 hours long. Nobody has time for that. Never mind when you're studying for the most important exams you're probably ever going to do. Yeah. So we launched Grade Academy, where students could actually use short, concise, exam-driven videos delivered by the best teachers in the country to get a good idea of where they're at and actually use that to better their exam results. Yeah. So I simultaneously ran those businesses. Now, Grade Academy was kind of like a side project, effectively. That grew into something a lot bigger. Yooni was still my full-time gig with Nathan because it was much more novel. There was a lot more intricacies with it.
That was your baby.
That was my baby, and still is my baby to this day. But when the opportunity came to sell Grade Academy, which was the first one, it was something that I seriously considered for a number of reasons. Personally, I was completely burnt out.
Yeah, I can imagine so.
Very much so. I didn't have a YouTube channel at the time, but I didn't have time to brush my teeth, never mind do anything else. So what I wanted to do was maybe just take a little bit of time back from myself. When you start a business, you put everything back into the business. You don't really make any cash. Yeah. So it was the first time in my life where I had the opportunity to get a little bit of financial freedom and free up a little bit of time in my day-to-day. So I sold Grade Academy to a publishing house based in Ireland, and simultaneously we were also approached for an acquisition for Yooni. Yooni was going well at the time. We were looking to expand not just from students but also to people in careers and in jobs, and help people find progression in careers using our tech and using the data that we had. Yeah. And luckily another company shared a similar vision. We had very similar goals and values. And only a couple of months ago, we signed the contract in the acquisition for Yooni as well.
Congratulations.
So now you can probably call me officially unemployed.
Self-unemployed.
Self-unemployed.
That's the term I like to use.
Yeah.
It's fantastic. And it must have been it's such an opportunistic mindset, because in the midst of a pandemic, you see the opportunity for online learning. It must have been kind of scary almost, because you kind of need to get this out now, because this is the opportunity. It's the best time to launch, right?
Yes, absolutely. That very much was a business idea that if I held on to it for a little bit longer than I did, the opportunity would have gone. Yeah. Somebody else would have done it, or it would have been too late to seize the hype that it did have. I think that's definitely one of the core principles that I've seen in people that have done very, very well out of, say, business or projects, is that they do more than they think. So one can, think a lot, do little and achieve nothing. One could do a lot, think little and achieve something. But if you can combine the thinking and the doing and actually have that action bias mindset, you can achieve a lot, because nobody knows what they're doing. No matter what level anybody is at. This is one of the things I've learned, whether they're a CEO of a Fortune 500 company or whether they're doing their own startup from their bedroom, nobody really knows what's going on.
Everyone's winging it.
Everybody is winging it. And when you realize that, you really do get a sense of freedom, and you can let your creative flair kind of go, because you know that, you know, the person down the road may not necessarily have the equipment or the skills that you have to develop something that you want to develop.
What I thought was interesting from your 21 lessons from 2021 was how you said you felt there was a lack of purpose after you sold your businesses. I'm interested to know, has that purpose been replaced by your YouTube channel now and other things you're doing, or are you still kind of searching for replacing the purpose you had with Yooni and Grade Academy?
Yeah, I think that's a really good point. Link in the description, by the way. But the lesson was that purpose is more important than money. And as I said earlier, 2021 was a really good year for me on paper, but personally, it was actually probably the hardest year I've ever had in my life. Purely because when the business is sold and when, say, my day-to-day purpose had gone, even though I may have had a little bit more money in my bank account than I ever did, my sense of day-to-day motivation, ambition, drive actually almost went to nothing, which is very unlike me because I generally have quite a type A personality in which I'm always doing something. And it made me realize that, you know, money isn't a means to an end. Like, it's almost like a game. Like, are you playing the game to eventually leave it? Or are you playing the game infinitely? Are you playing an infinite game? And I think it was a very important lesson for me to learn, in the sense that no matter what you do or no matter how much money you make, there are some things in life that you literally can't buy. I know it's a pretty cliche thing that lots of people say, but it really is true. Yes, you can relieve some stresses with cash, but without a purpose, for me anyway, because everybody's different, I don't really have too much to do in my day-to-day. With regard to replacing that purpose and with YouTube, yes, I think it's definitely after giving me an avenue in which I can kind of explore my creative side a bit more.
Yeah.
I tend to be quite creative, and it's always something I wanted to do. I just don't think I ever had the well, number one, the time, but that's just an excuse. I never had the drive or the confidence to maybe do it.
And it's hard to do. It's hard to get there, you know.
It's really fucking hard, Dan.
It is
it's
hard,
it's very hard because it's a very vulnerable position when you're putting yourself out there. But, and we were talking about this earlier, like, when you put yourself out there in that capacity, you increase, and Ali Abdaal talks about this a lot, your serendipitous luck, in the sense that, you know, you're going to expose yourself to so many more people and so many more opportunities that, you know, generally people rarely regret starting a YouTube channel or starting posting content.
Yeah.
Gary Vee talks about it a lot. Document.
Yeah, absolutely. And it's funny because I know Emma behind the camera, his word of the year is serendipity. So
is it? Shout out to Emma in the back.
I totally agree though. Like, in terms of purpose, I am a strong believer that everybody has to have a project, something that they do outside of their quote unquote normal life, something that kind of gives them value and meaning. And for me, for many years, and still is, it was all about creating music and performing live music. And, you know, back in the early years, I was a massive gamer. I was around in the very, very early days, and doing YouTube was something that I equally wanted to do at that stage, but I just never kind of had the confidence to do it. I never really wanted to invest the time that's actually required to do YouTube. And so when I started the channel in 2020, it was almost like I was taking the creative aspects of writing music and finally combining them with my passion for creating video content. So it really is a case of just getting started and just getting out there.
It is, and it shows too with the content that you're putting out. Like, you really do. People these days are extremely good at sensing whether someone is being authentic or not in video content, because we consume so much content ourselves.
Yeah.
And I think people want to resonate with the people that they watch online. So, like, merging that creativity with a passion is something that people either aspire to, and then they want to watch your content and they want to learn from you, or it's something that they can use themselves then in their own day-to-day life.
Yeah.
So I think it's extremely important, and you're right. For me anyway too, I do need to have a project.
Yeah. Speaking of projects, I know you asked me earlier about cryptocurrencies, and we were kind of chatting about blockchain a little bit. I know you uploaded a video recently about NFTs. So maybe if you could just expand on your thoughts about NFTs, where that kind of whole project landscape is going in the future.
Yeah. NFTs first came on my radar around February of 2021. I had no idea what they were. I was big in the crypto and blockchain game anyway. At that stage, I looked into it quite a lot, and it was something that really interested me. And when NFTs came around, I didn't really have a sense of what they were for.
Mm.
You know, the general consensus of NFTs is that they're a JPEG. You can right click and save image, and you know, that's it.
Yeah.
The value in NFTs is the technology,
Yeah.
not necessarily the applications at the moment. It's effectively a gold rush, but we don't really know what that gold is, and we don't know how valuable it is. And you mentioned it earlier, you can't really put a value on the data yet. In the next 10, 20, 30 years, I think people are going to realize that NFTs are going to be one of the most important technologies ever invented, for the reason that it verifies ownership of assets in a digital capacity.
Yeah.
And we're only going more and more digital over the next few years with the metaverse and with various other applications. And what NFTs facilitate is that, okay, Dan owns this. This is Dan's identity. We can verify this through this technology that can't be hacked or that can't be exposed in another way. Right now, we can't do that. And you have all these frauds and scams going on where you can't really verify what people are doing. Currently, it's incredibly difficult to say how valuable the current application of NFTs are.
Yeah.
Because you look at the likes of Bored Ape Yacht Club and, you know, the CryptoPunks.
Yeah.
And we all wish we bought it at the time, but there was no way of knowing that the value of those NFTs were so high. And the thing to realize is that the value of those NFTs isn't in the technology of the NFT. It's in the community that it's built around. It's in the verification, and it's in so many other aspects. One really practical use, I think, of NFTs right now is utility.
Yeah.
So I gave an example in my video. I'll give it very, very quickly now. Jack Dorsey's tweet, the first original tweet, just set up my Twitter, sold for 2.9 million as an NFT, which is absolutely bonkers. At the moment, that is purely based off speculation, right? The value of that NFT is based off what people value. And if Jack Dorsey, I don't know, made some outrageous comment tomorrow and his reputation went down the Swanee, so would the value of that NFT. Yeah. But where that NFT might have some real world utility, practical applications, would be that if Jack said, okay, you know, whoever owns that NFT, I am going to have a 1 hour coffee with them every month. And I can verify who owns that NFT. Instantly, there's a real world utility to owning that asset. Yeah. And it can be verified. That's the most important thing. It can be verified and it can't be hacked, or no scammer can come in with it. And then the value of that goes up because, again, there's a real world application. Yeah. And that's where I see the value really being measured now. In the future, though, with the metaverse coming along, NFTs are going to be everywhere. Yeah. I don't think it's something that's going to happen all at once. You know, people say like, oh, well, you know, there's nothing happening with NFTs right now. I think the technology is going to evolve so much that we're not going to recognize NFTs in 20 years' time, but the underlying concept is still going to be the same.
It's really interesting, especially like as a musician. You know, I look at our music and I look at the potential in 5-10 years. What does an album look like? You know, do we move to a stage where releasing songs as NFTs is the default? And that kind of utility benefit, okay, you know, you get to come to 5-10 gigs a year for free, you get to meet the band. That kind of stuff is real life value that can be attributed, you know.
It's proper value. And that's one thing that I haven't even touched is the opportunity it gives creators and artists. Like there was an artist, his name was Blau, and I don't know the exact details, but he sold one of his singles as an NFT. And I think he made in the realm of 5 to 10 million in this sale. But the owners of those NFTs then got royalties for what the song made on Spotify or online or through his album. So he was able to raise money to produce this album and to produce this song and then give back to the people that actually supported him and believed in him from the start. I think there's going to be a whole new era of creators, because now there's an opportunity for them to actually benefit financially over the course of the lifetime of the asset that they're selling.
Yeah. It gives an opportunity for the likes of YouTubers. I think you mentioned it as well in your video. You know, you need to raise some money for your channel. NFT a couple of videos, you raise some money, you know, and even like real estate is super interesting because at the moment there's so many intermediaries involved when it comes to buying and selling physical real estate. So you have to, you know, register properties with the land authority, and this can take backlogs of years almost. So what if you had a technology, NFTs, whereby you could instantaneously verify the ownership of the property. So that's really interesting.
It is. It's incredible. And I think it's important to note that, the technology isn't there yet.
No.
Like we're still talking hypothetical situations most of the time. Obviously, Blow actually did this, and it's been used, today in real life. But a lot of the applications that people are going to be talking about regarding NFTs still isn't there, and there's a lot of work to be done. There's a lot of failures to happen. Most of the NFT projects that are currently available right now are probably going to fail.
Yeah.
But they're going to fail in the name of NFT succeeding in the future.
Yeah. Last question from me. What does 2022 have in store for Darragh Lucey?
I'm going to have to put some thought into that one. 2022 is going to be a very different year, both career and personally. First of all, YouTube-wise, I'm really looking forward to delving deeper into the content that I'm creating. It's one of those things that I would do for the rest of my life if you told me I wouldn't earn a cent, because it's just a passion.
Yeah.
I really love doing it. Naval once said, do what looks like work to others and feels like play to you. And that definitely feels like play to me. I'm kind of exploring different career opportunities right now at the moment. All I've ever known was working for myself and scaling companies myself. And with that, you learn a lot, but I think there's only a certain amount you can learn when you're teaching yourself and when you're learning lessons yourself. So I am exploring opportunities working with, really exciting companies in the Web3 space and the finance space that are really leading that innovation and hopefully maybe getting a leadership position there.
Brilliant. Well, I've no doubt that I'm looking forward to the YouTube channel expanding.
Thanks, Dan. You too.